To set up the Fibonacci retracement tool on TradingView, start by going to the left sidebar. Click on the arrow beside Gann and Fibonacci tools and select Fibonacci retracement. Now, on your chart, click once, drag your mouse upward and to the right, and click again to lock it in place. Once you have the tool on your chart, right-click on the Fibonacci lines, and a menu will show up. Find and click the settings icon to open the customization options. You'll see three icons: visibility, coordinates, and style. Click on the style icon. Let's start by simplifying the view. Uncheck all levels except for 0, 38, 1, 50, and 61.8, keeping the focus on the most essential retracement levels. Then remove the background color by unselecting it. We can also remove the prices displayed on each level, which will help reduce chart clutter. Next, to make the tool even more user-friendly, switch the values from decimals to percentages. Click on the drop-down menu where it shows the values, select %, and now your Fibonacci levels will display as percentages. To make the tool easier to read, adjust where the percentages appear. Under Labels, select Right so the percentages show up on the right side of each level line. Then, select Middle to position the percentages right beside each line, instead of above it. Now let's make everything more visible. Set the font size to 20 so the numbers are easy to read. Then, in the level settings, choose the thickest line option to make the Fibonacci line stand out. And that's it. Now you have a clear, customized Fibonacci retracement tool on TradingView, set up and ready for effective use. First, let's go over the three main types of markets. Knowing which type you're in will help you decide when to apply the Fibonacci retracement tool. In an uptrending market, price moves generally higher, driven by strong buying pressure. There are two essential moves here: an impulsive move, where buyers push prices up, and a retracement, which is a temporary pullback caused by buyers taking some profits. This pullback creates a chance to enter as the market prepares for the next impulsive move. Think of the retracement as a pause before the buyers take control again. In a downtrend, selling pressure dominates, pushing prices lower. Again, we have an impulsive move where sellers are in control, and a retracement, which is a slight bounce as sellers pause to take profits. This pullback is often an opportunity to enter the market for the next wave down. A range-bound market is when neither buyers nor sellers are in control, causing prices to move sideways. This type of market can make Fibonacci retracement levels less reliable since there's no clear trend. For now, we'll focus on using Fibonacci retracements only in trending markets, where they're most effective. Take a look at this chart example. Here, the market is in an uptrend, shown by a strong impulsive move upward, followed by a pullback. Start by drawing the Fibonacci retracement from the beginning of the impulsive move to its peak. As the price pulls back, focus on the zone between the 50% and 61.8% Fibonacci levels, often called the golden zone. This area frequently marks the end of the retracement and signals the start of a new upward move. For an aggressive entry, you could place a limit order within this golden zone without waiting for further confirmation. Keep in mind, though, that this approach carries higher risk but can also offer substantial rewards. Take a look at this chart example. Here, the market is clearly in a downtrend, shown by a strong impulsive move downward, followed by a pullback. To set up your Fibonacci retracement, draw it from the start of the impulsive move down to its lowest point. As the price pulls back, keep an eye on the area between the 50% and 61.8% levels, often referred to as the golden zone. This zone frequently signals the end of the retracement and the potential start of a new downward move. For a more aggressive approach, you could place a limit order within this golden zone without waiting for additional confirmation. Just remember, while this method can offer higher rewards, it also carries a higher level of risk. This trading strategy of entering within the 50% and 61.8% Fibonacci levels can work, but I don't recommend relying on it alone. Let's dive into how the TLL method works and why it can improve your trade entries in trending markets. Let's go over what the TLL method means. It stands for Trend, Level, and Liquidity Sweep Signal. For a Fibonacci retracement level to hold, we need all three of these elements present. Let me walk you through a chart example to explain. As you can see here, the market is trending upward with impulsive moves followed by retracement moves. Now, here's another impulsive move that's followed by a retracement. We'll start by plotting our Fibonacci retracement from the beginning to the end of the impulsive move. If you look to the left, you'll notice that the 50% Fibonacci level aligns with a previous resistance level that has now turned into support. In traditional technical analysis, we know that when the market retraces to a support level, it often bounces. With our Fibonacci retracement strategy, we know that when a retracement reaches the 50% or 61.8% levels, there's a high probability it will bounce again. Now, we have three elements aligning. First, the trend. We know buyers are in control, so we're trading in the direction of market makers. Second, we have a key level, a former resistance that has now turned into support, aligning with our Fibonacci retracement level. All we need now is the third element, a liquidity sweep signal to confirm our entry. Here, we see a clear pin bar that briefly broke below the support level and then closed above it, creating a liquidity sweep. This sweep indicates that the market is likely to continue upward with a new impulsive move. With all three elements in place, we can take this trade with higher confidence, backed by multiple confluences suggesting the market will rise. We enter the trade at the close of the pin bar, set a stop loss just below it, and target the next resistance level. Now look at what happens next. The market moves right to our target. This type of entry with the TLL method has a win rate of over 75%.